While the rest of Ontario real estate market is in correction territory, Sudbury is the exception, up 6.2% year over year, while the provincial benchmark is down 6.5%. That's why smart money, out-of-town investors, multi-property owners, even some from the US, has been quietly buying Sudbury investment properties for the past 18 months. Today, I'm breaking down where exactly the smart money is buying in Sudbury, why these specific neighborhoods, and the 4 numbers every investor needs to know before they make an offer. I'm Manfred with eXp Realty Brokerage, in 10 years selling homes in Sudbury, including a growing portfolio of investment properties. Let's get into it. Quick thing first, if you're an investor looking at Sudbury, text me directly. I work with out-of-town province and out-of-country investors regularly. Real number, real answers, no pitch. ManfredHomes.com has the full Sudbury investor guide, including current rental rates by neighborhood and projected ROI calculations. All right, where smart money is buying. Why Sudbury is the 2026 outlier. First, the macro picture. CMHC has named Ontario the only region in Canada expected to see price declines in 2026. Sudbury is the exception within Ontario. 3 reasons smart money is paying attention. 1, affordability gravity from Southern Ontario. Toronto buyers priced out of the GTA are migrating north. And Sudbury is the largest, most amenity-rich Northern Ontario city. 2, civic investment momentum. $200 million downtown event center under construction. The KED expansion. Shoresy filming season 6 here. Smart national money is writing checks on Sudbury. 3, resource economy stability. Val, Glencore, KGHM, the mining sector continues to provide stable employment. When commodity prices rise, our market gets a tailwind that Southern Ontario doesn't get. The 4 neighborhoods smart money is buying based on rental yield, appreciation potential, and tenant demand. Here are 4 Sudbury neighborhoods drawing investor interest. Neighborhood 1, Lively. Why? Valet workers, KGHM workers, Glencore workers on rotating shifts pay premium rent for proximity to the mine. 2 and 3 bedroom homes with basement suites are gold for the rental investor. Typical investment property, $400 to $500K. Rental income, $23,000 to $3,000 per month. That's a gross rental yield of 6.8 to 8.7%, significantly above the Sudbury average of 5.2. Neighborhood number 2, Hanmer, Val Caron, the Valley. Why? This is family oriented. 3 and 4 bedroom homes with garages and yards. Demand for young families, government workers, Laurentian University employees who want some suburban living with city access. A typical investment property is $425,000 to $525,000, and rental income range from $2,400 to $2,900 per month. Gross rental yield is 5.8 to 6.6, slightly higher, and you're going to get longer term stays. Neighborhood 3, New Sudbury. Why? It's walking distance to shopping, restaurants, and transit. Strong demands from students, young professionals, and downsizers. Highest tenant turnover, but easiest to fill vacancies. Typical investment property is $450 to $550, and rental income can be $222 to $3,000 per month. Neighborhood 4, South End, Long Lake area. Why? Premium location, higher income tenants, lifestyle-focused renters. Lower rental yields, but strongest long-term appreciation. Typical investment property, $525 to $675. Rental income range from $2,500 to $3,200 a month. The gross rental yield is 4.6 to 5.7%. Best for buy and hold long-term wealth building. The 4 numbers every investor needs to run. Before you make any offer on any Sudbury investment property, 4 numbers must work. Number 1, gross rental yield. Monthly rent times 12 divided by the purchase price. The target, above 5% in Sudbury in 2026. Number 2 is the cap rate. The net operating income, rent minus expenses, taxes, vacancy allowance, divided by the purchase price. The target, about 4%. Number 3, cash on cash return. Annual cash flow divided by your actual down payment plus closing costs. Target, above 6% the first year. Number 4, break even vacancy rate. What vacancy rate can you absorb before your cash flow negative? The target is minimum 20% buffer. If the property doesn't hit all 4, walk away. There are other Sudbury opportunities. Investors who skip the math are like hockey teams that don't check the standings. They're losing the game and they don't even know it. One final insider note. There's one thing investors from outside Sudbury consistently miss: property management. Sudbury's geographic spread is 3,600 square kilometers. Makes self-managing from Toronto, Vancouver, or the US nearly impossible. The right Sudbury property manager costs 8 to 10% of the monthly rent. The wrong one can cost you tens of thousands of dollars in tenant disputes, deferred maintenance, and vacancy. I work with 3 property managers I trust. If you're investing in Sudbury from out of town, ask me for a referral when we talk. And that's not a sales pitch, that's me protecting your investment. Sudbury's appreciating while the rest of Ontario corrects. Smart money is buying. The math is in your favor if you run the numbers. 705-923-6564. Text me for an investor consultation. ManfredHomes.com. Free Sudbury investor guide, and subscribe to the channel. Next week, we cover first-time buyer step-by-step guide for Sudbury in 2026. Real talk, real numbers, real Sudbury.